Hi, I'm Samir Mathur, co-founder and CEO of ROINet Solutions. Our firm is kind of prime objective is to ensure that we can provide financial services to millions of people in rural India. We were in existence for the last 10 years.
Samir, you're the managing director, or let me say, the founder of ROINet Solutions. Um, how did you get into entrepreneurship? I believe you became an entrepreneur fairly late in life. You're not like the typical mold of an entrepreneur in most people's mind is a 20-something guy who starts off, but that's not the case with you. Take me through your journey.
Yeah, so I basically my last role I've done about I had close to about 15 years of experience in the corporate world. My last role in the corporate world was when I was working as a country manager with Hewlett Packard, and I was heading their personal computer and the printing business in India. Uh, it was at that point of time that I'd done about 10 odd years with HP, and I was in a state of mind where I wanted to explore something different. I wanted to look at moving to the US to be a part of that HP worldwide team at that point of time. This is way back in 2009, 2010. And so I one of the things I explored was I said if I'm going to the US, then it possibly makes sense for me to maybe add an educational degree there. So it also kind of prepares me for bigger and better roles while I'm there. And that's how the idea of doing a MBA kind of came in. And I then kind of applied for the 1 year MBA program at MIT Sloan. And in 2010 is when I kind of left HP to do this particular program. Uh, it was a 1 year program.
One question before the MBA. Uh,
Yeah.
when you say country manager for printer and PCs, essentially it's a very sales heavy role. Like you would be responsible
Um,
for ensuring
no,
the.
it was a comprehensive role in the sense that it also included category, marketing, operations. So it was like a mini CEO role of
Hmm,
sorts.
hmm,
But most of the multinationals in India, US-based multinationals, the India arm is more an execution arm. You're right about the fact it's more sales heavy because most of the product development and the strategic piece happens way back in the US. So yes, to your point, I would say yes. It was predominantly more sales heavy. HP almost 90% of the business was B2B, so it really did business through its set of partners. The B2C piece was quite small. Um, so I think the e-com thing was just kind of kicking in then. But at the time when I was there, I would say 90% was still through partners.
okay, understood. So that gives me an idea of your skill sets. What you must, I assume you must have been good at enterprise opening enterprise accounts and things like that. Got it. Okay.
Building up the channel network and those
Hmm.
kind of things. Yeah.
Okay. 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 So yeah, your MIT journey.
Yeah, so the agreement I had with HP then was that I would do this MBA program at MIT, and post that I would transition into a global role in the US. So that was the way the journey was kind of envisaged for me. Um, so during my program, I think 6 or 7 months into the program, I reached out to the HP global team, and they kind of offered me a role of the global lead for a new set of products where they were launching. They were getting in the world of mobile phones and world of tablets, and at that point of time, HP was exploring of doing its own operating system, which I kind of found exciting. I said, finally, we're trying to do something within the company which is unique, differentiated. You're not typically relying on the Microsofts and the Intels of the world to drive your business. And so that's what the discussion kind of initiated. And my idea was post the program, I move into Palo Alto, and I cannot be a part of the global team. But as luck would have it, these guys did a launch, I think somewhere in the December, January timeframe of 2009, 2010. And unfortunately, those products bombed. They didn't do well in the marketplace. The mobile phone reception in the marketplace was terrible. The tablets didn't do well, and the operating system would work. So things started just kind of falling by the wayside, and it kind of also made me jittery. I said, no, I don't want to land up into a team which possibly could get disbanded in a few months' time. So yeah, as luck would have it, I suddenly realized that that option was closing down, and I had to explore other avenues. So the thing was, I thought I'll come back to India. So while I was studying there, I had two of my colleagues. There was one of my colleagues from who was studying at the Harvard Business School, a Pakistani guy by the name of Hiraj, solid tech guy, fantastic technology guy, and he and a couple of us were working on a project of looking at addressing the issue of financial inclusion in developing countries. At that point of time, we're looking at Africa and in Pakistan and those kind of places. So it was an academic project, and I was part of it. And I never thought that that project would lead anywhere. So I remember the last day when I was kind of everything was done, the convocation ceremony was done. I was kind of Hiraj gave me a call and says, "Let's have a cup of coffee." I said, "Sure." And he said, "Dude, why don't we look at setting up an enterprise of our own and do something for in this space in India?" Uh, so of course, I wasn't too serious. I'd never thought of entrepreneurship as an avenue. My mindset is all about working in corporates and getting a fixed salary at the end of the day. So I kind of parked it back of my mind, but I said, "Chalo, take that, dekhte hain, let's explore an option and go back to India." So when I came back to India, I had a few months with me. I was still discussing with the HP India team and the HP Singapore team for options. And I started meeting senior people in the financial services space, banks, etc., on this concept of financial inclusion. I'd heard about this model of business correspondence and how the government of Bleak RBI was looking at having private players coming in and kind of being a part of the banking, expansion system in India. So the general feedback which I got is very encouraging. Most of the senior people said that there's a great time for people to set up enterprises of their own, and with yeah, and this could be a good opportunity, the right timing, good opportunity. Government then had NPC along with NPCI created this JAM framework, which is Jandhan Aadhaar, the mobile framework, the JAM framework, and there was a bit of method to the madness and the structure which was being created.
Jandan
So
was a bank account opening drive,
yeah, the
right?
basic savings, basic savings, basic deposit account. Uh, so it started. I mean, that started interesting me. I said, you know what, it seems to be a good space. It could be a space we could construct something large. The opportunity also seemed pretty impressive because at that point of time, almost 60-70% of the people in India did not have banking accounts and did not have access to basic financial services. And so it seemed to be a good problem to get into. I said, it's a good problem to get into and try to address. So we started speaking again, and the only thing at that point of time which was a factor which I was considering was that, and I told these two colleagues of mine that I'll only come in if I get a fixed salary at the end of the day, because I had also spent a lot of money during that last 18 odd months. So I said, listen, I don't mind jumping in, but I need a fixed salary. So if you can find an investor, I'll jump aboard. So as luck would have it, we found an investor who was going to put in the first check, and hey presto, January 2000, then we initiated the company and we, started this entire whatever expedition.
Like, did you also have equal equity as the other two, or because you were taking fixed salary, so that
What really happened was that Hiraj at that point of time, while he came to India, he also realized that given the kind of equations and challenges there are between Pakistan and India, he did realize that it would be difficult for him to be very seriously engaged into the India project because it's interesting. He came and he stayed in my house for 15 days. And when we would go and meet bankers, and he would introduce himself and saying, "I'm Hiraj from Pakistan." Suddenly, everybody would be like, you know, who are you and how do you come inside our office? you know, so and I think he obviously felt the strain, he felt the friction, he felt the potential challenges which would come in if he comes on board. So yeah, we had a conversation. We said, okay, fine. I mean, as far as India is concerned, or for that matter, even us going to Pakistan is concerned, may not be a great idea. If at some point of time you do something global, then we could all kind of circle back. So he kind of then obviously decided to stay away. So it was me and my other colleague and two of us and the investor. And I was the largest shareholder then. It was all sweat equity. And of course, the other two shared the balance.
Okay, okay, okay. And what did you build over there?
So FIA was predominantly, again, like I said, business governance space. We had types with multiple banks, more focused on public sector banks, and so we built up the BC infrastructure at that point of time, and uh, it was an interesting journey because the banks were very excited. A lot of push from the government, so we got a lot of tailwinds to support our business. And I would say at that point of time, we possibly one of the most fortunate firms to have operationally broken even in the span of what, maybe 8, 9 months. We were
Wow.
making money. Yeah, and we were over the moon because having a startup which breaks even in 8, 9 months is something which is founders dream of.
Uh,
Uh,
Let me recap my understanding of the business correspondent space, and you tell me if I understand it correctly. So it's a like a PPP, that a public-private partnership kind of a model, where you would want, for financial inclusion, you would want banks to be present in every small village, town, etc., and have ATMs, but it is prohibitively expensive to do that. So the business correspondent model is bringing in a private player to build distribution points for a bank. And how the business correspondent makes money is that for every transaction, the business correspondent uh, charges the bank some service fees for that, which could be a fixed rupee value or a percentage of transaction. And typically, the BC is not, it's not an exclusive thing. You can be a business correspondent from multiple banks, which then allows you more profitability. And typically, you tie up with small entrepreneurs, retail shops typically, who are your point of sale distributors who actually do the transactions. For them, it's an additional source of revenue. So they get revenue from the tech company, which is done the tie up with the bank. So for them, it's an additional source of revenue, allows them to monetize better. For you, it is distribution points without any fixed investment, because the person already is running a store, he's already known in that area, so the customer acquisition cost, the distribution cost is all uh, taken up by the distributor on ground, the entrepreneur who's at the last mile. Is this correct?
Absolutely, absolutely.
Okay.
You hit the nail on the head. I
Mm.
think the starting point of the entire issue at hand was that this is way back in 2010. Almost 60% of the population of India did not have bank accounts, and to that extent, did not have access to financial services. And if you look at the mathematical equation, if there are 6.5 lakh villages in India, only 50,000 villages had a bank branch of, let's say, a State Bank of India and those kind of things. So, and the challenge with banks were having is that they did not find it viable to move into a smaller location and set up a bank branch because it turned out to be loss making. So I think RBI really conceptualized the model saying that the way to crack the code is to tie with a private player who could construct a mini bank branch kind of a model at a real fraction of the cost. So the model worked out fine because then we worked on a model where we tie with Kirana stores and those kind of players, and at a fraction of the cost build up a banking infrastructure.
There is one cost still you have, like a customer acquisition cost, which is acquiring the entrepreneurs who are the point of sale people. uh, i- does it work out economically, the cost of having a sales, because you need a sales team which goes out to these places and signs up people and all that. So does the economics work out in terms of your customer acquisition cost versus the long term value of that, acquiring that point of sale?
Yeah, today, I mean, if you look at our sales infrastructure today, we've got about 250 people, sales people on ground, and we've got about 70,000 banking correspondent points. So typically, every guy manages close to about 300 points. So yes, from a cost benefit analysis, it works out fine because those 300 points not only end up doing banking services, but they end up doing non-banking services, which kind of ensure that at an individual level you kind of broken even and you make profits. So the model is, I think, conceptually allows for profitability at the end of a table. And with new products and services coming in, that's where the profit, so-called opportunities lie.
Okay, okay. So, as in, like, you could distribute digital gold or mutual
Absolutely.
fund investment or insurance policies through these
Yeah.
point of sales,
Absolutely.
and
Absolutely.
that allows you to make more margin. Okay, okay,
Yeah.
understood, understood. uh, this is a space which has a few fairly large companies in it already, right? And because it seems to be a space in which you don't necessarily need a lot of VC money to build scale.
So the first question about in number of players in the space, of course, the number of players, regional players, etc. But I would say there are about 4, 5 reasonably large companies who are all participating in this space. Um, but the thing is that while at a core level, which is basic banking services, there is commonality in terms of the model. But every company over a period of time is taking a position on a certain category, which kind of differentiates them from the others. So a company X, for example, could say, "Listen, I want to look at addressing the issue of low penetration of insurance." Company Y could say, I want to look at the wealth management piece of people. How can I, ensure mutual fund penetration in the country goes up? Company Z could be focusing on, let's assume, looking at an e-commerce model of reaching out to a smaller town. So while at a core level, you might say that there is this commonality, but I think every company is now differentiating by the position it's taking on various categories. And I think
Okay.
that space is it's a huge opportunity for each of the organizations.
Hmm. Okay. Okay. Can you tell me which company is doing what? Like,
For example, something like a Spice today. Spice today would be, I think they've taken a good lead on the e-commerce side. I think they're playing on the e-commerce side pretty well. Pay Nearby, I think, has done a pretty good job in taking a lead on the insurance side. Yeah, and of course, various regional companies take leadership on one category or the other. But I would say the top two players would be, I think, e-com could be one category and insurance could be the other.
so you said you have 70,000 point of
Yeah,
sales.
active point of sales. Yeah,
Okay. What is the similar number for, say, a Spice or a Pay Nearby? What?
Spice would be, I think, almost active. I would say almost 3 to 4 times our size.
Okay. Okay.
Yeah,
Okay. Got it. Okay. But you would broadly be in like the top three, top five in this
I
space?
would say top 3 to 4. Yes, top three. I would say.
Okay. 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 Interesting. Got it. So let's continue with the journey. So today you're not running FIA Technology. What happened?
That's we worked together for about 3 years between 2011 and 14, and I think and that's of course a learning I had when we kind of doing the journey itself. That if at a certain level there are strategic differences in terms of the way you want to run a business, the way you want to manage people, if there is a strategic disconnect, invariably challenges emerge. And while of course founders do try to solve some of the challenges, but at times it best makes sense for one of the partners to kind of move on. So 2014 is when I decided to kind of part off with FIA because I was realizing that the partnership was just not working, and I thought for the best interest of FIA oblique, even for my own mental space, it is important that I do something which gives me that freedom, space, and flexibility to do something on my own. And having kind of played a
What
pivotal
was
role in
the
building.
disagreement over, if I can ask?
Disagreement was in a lot of things. I think it's about the way you want to run the business, the way the culture you want to set in the company, the way you want to manage people, build up teams, the way you want to look at moving the next level of investments. Where do you want to invest? Which product categories you want to invest? So I think that's where the disconnects happen. And again, I'm not saying I was right or she was right or she was wrong. I was wrong, but there were you might say differences which we just couldn't reconcile, and it made sense for at least one of us to move on. And I took that
Okay.
decision.
Hmm. Hmm. Okay. Did you monetize your stake in that?
So we're in the process of closing that piece, and hopefully, I should be
It's
able
being
to.
wound up.
Yeah, yeah. It's kind of hopefully that should get closed in the next few months.
Okay. Got it. Got it. Okay. Okay. So then what? Like 2014, you moved on.
Moved on, started ROINet Solutions, and initially we were in the same space, so we worked in the same space for the first few months, and then we kind of took a pivot to moving towards the private sector banking space. and we moved into a number of new categories. We moved into travel, and travel was one interesting category we moved into. And since then, if you look at FIA and us, I would say the differentiation would be in terms of where we've kind of taken our organization to. Today, we are more product heavy. We're moving into newer spaces, newer categories, and kind of not just the BC infrastructure, but also you might say we become a strong products based company, and that's what our focus is going to be going forward.
Okay. So at FIA, you started with PSU banks, like the nationalized banks, being the BC for them. Okay. Any benefit of going with private banks as opposed to nationalized banks?
So in the case of private banks, the advantage you have is that private banks have lesser restriction in terms of setting up points. So, for example, just to give you a sense of perspective, if you got 70,000 points right now, we have just about 5,000 points of public sector banks, and we have about 65,000 points of. So, public sector banks tend to be far more rigorous, far more process oriented.
Mm.
So if you could open up 100 points of a public sector bank in a month, I could open up 1,000 in a private sector bank. There are far lesser
Wow.
restrictions. So your ability to scale, move into newer territories is far higher in private sector banks. But public sector banks bring with them the advantage that you can really carry the tag name of the bank. So if I've tied up with Bank of Baroda, you can actually walk into a village and you'll have a Bank of Baroda ROINet point. And plus, the bank offers its own set of products and services, account opening, and those kind of pieces. So therefore, the productivity of the public sector bank tends to be higher than a private sector bank.
In private sector bank, you can't put the signage or offer account opening and all like all.
See, private sector banks play more of a tech role, so they provide you a tech platform, and so it's if you're going with a Yes Bank, you just provide you the basic tech platform. You do put a Yes Bank signage, but the reality is in smaller locations, it's a public sector bank signage which has significantly higher value.
Right. The
So
brand
so
appeal,
the
the
brand appeal is
trust.
significantly higher.
Yeah. Yeah.
Yeah.
Okay. 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 And your point of sales are also responsible for opening up the Jan Dhan accounts.
Jandhan accounts, by the way, the Jandhan accounts currently can only be opened with in the public sector bank space.
Okay.
The private sector bank space is predominantly just the transactions. It's account is basically deposits, withdrawals, money transfer. The account opening piece is predominantly through public sector banks, and of course, there are also now private sector banks today who are coming out as separate, BSBD accounts, which allow you to sell that across the various so-called channel fraternity. Jandan account is basically it's a basic account which allows you to transact only up to a certain value. So, for example, at any point of time, you cannot have deposits more than 50,000 rupees in a year. And number two, you cannot transact more than 100,000 rupees in a year. So, and it's, you can't, there's no check facility and those kind of pieces. So there are restrictions to the Jandan account. At the same time, a Jandan account also gives the customer access to subsidize personal accident insurance, health insurance, life insurance, and those kind of things run by the government. So yeah, it's like a mini savings account, with, obviously far
And
higher restrictions.
and it's completely free. No minimum balance required. No charges.
No, no,
Okay.
no.
And I assume the private sector's banks don't offer it because of that. There's no money to be made.
Yeah, so I guess obviously for them, every time you open an account, there's a cost involved in managing account. So
Mm.
private sector banks are now coming out with their own versions, where they're saying you keep a minimum of let's say 2,000 rupees or 3,000 rupees to justify their costs. But yeah, I would say even though if you ask me, our experience, if you look at the public sector bank space, because of the fact they have bank account opening, they've been able to build up a larger corpus of what we call as the deposits and so
Interesting.
for the banks today, it's very interesting. I remember when I used to meet the banks way back 8 9 years ago. The public sector banks used to treat this as a as a just a tick mark or
PSR.
exercise they had to do. PSR, exactly. Karna hai, you have to do this stuff. But today, for the banks, this is for some banks like Bank of Baroda, it's a highly profitable vertical. I mean, the numbers are really, really, when I heard the numbers last time, and they seemed like, wow, it's a very important piece of the business and profitable business for them.
Okay, okay, okay. I'm assuming the deposits here would not be interest bearing, which anyway in savings account they're not really interest bearing.
Yeah,
Okay, interesting. Yeah, you said some BSBD account or something. The private sector banks are doing
basic
something.
savings and basics deposit account.
Okay, 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 okay.
No, so
Yeah, that's it.
your question was deposits. Are the deposits interest? The banks pay the interest? Answer is yes. They do pay interest.
Oh,
It's
they do
treated like
pay
a
interest.
normal. Yeah, 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 they do
Okay,
pay
okay,
interest.
okay, okay,
Yeah.
okay. Got it, got it. Okay. Uh, how did you uh, reach to 70,000 point of sale partners with very little funding? I can see for the first 2 years you didn't raise any funds at all.
So of course, in the initial phase, we kind of all bootstrapped. But the advantage I had is, given my experience in FIA, we had the credence with the banks. We had credence with the partner fraternity. So we were to use that basic credence and get our initial licenses and contracts. The banks had built up we built up a trust with them, and we also had a basic channel infrastructure ready, who was willing to kind of work with us because of the trust element. So yeah, for the first, I would say, yeah, 3 odd years we were kind of bootstrapped, and post that, of course, we raised our first round of funding.
What do you need to start this business? So do you need a technology platform? You need relationships with banks. What all do you need?
Yeah,
What are
so
the
so
various
yeah, so what you
pieces?
need essentially, I think technology is an important element, especially if you're going into the public sector, the private sector space. You need to create your own platform. You need to create your integrations with various product suppliers. So that's an important piece, and having a good tech team is very critical. Is very very critical.
What does the
Um,
tech do? It is able to read balances and then make entries into the bank's ledger, and it gives the point of sale, the store owner, like a mobile app where he can do
yeah.
authentication. Like
So
what all
on the
does
tech
it do?
side, yeah, on the tech side, of course, currently we've got both a web and a mobile-based platform. Again, since we're doing pure B2B, it's a platform created for enabling the partner to do transactions. So the tech platform essentially is you might say it's a linkage between the partner and the banks, right? So all our integration with the banks, all our wallet management, all our basic transactional data, etc. So you might say that platform really manages it, and all the other integration which are required. For example, today if you're talking about recharge business, air business, rail business, we now also got into mutual fund business and those kind of pieces. All those integrations get integrated into a single platform and with a single wallet. So for a retailer today, he just has a single wallet by which he can kind of do transactions across various products and services. So the tech essentially you might say is really the middleware. It's the connecting between the banks and the retailer. And yes, obviously, over a period of time, reporting and MIS and those kind of pieces get added on to this. But to your question about what are the critical components, I would say technology is a very critical component. Um, and the second piece, which is kind of also important when you're starting off this business, is to have people who have connections and networks in the banking space. Because the key challenge you face, especially dealing with public sector banks, is that it's like a chicken and egg story where banks insist that unless you got 3 years of experience in this space, you cannot qualify for you cannot even, and that's a question I used to have with the banks all the time. That boss, unless you give me a contract, how do you get my experience? So it's a bit of a challenge getting your first contract, and that's where networks and relationships come in. So having somebody who's got a network with the banks and who can say, okay, fine, give us the first license, and becomes an important critical component. So I would say these two would be important for you to get started. And of course, third would be having people with channel sales development infrastructure becomes another critical component.
So you employed people who went out and signed up retailers, or did you
Yeah.
use some aggregator who can go and get you retailers? Or
Yeah. So the starting point was to hire a sales team. So obviously we started small. So 70,000 has not happened. It did not happen initially. We started with one single state, invested in a few people, also used aggregator model. People had their own networks. And as the money started coming in, we started reinvesting it back into newer states and newer territories. So a standard scale up model, but yeah, having the first set of salespeople was a critical point.
these aggregators charge per sign up, or they have a revenue share?
They have a revenue share. They have a revenue
Okay,
share. So typically,
they
let's assume
become like a master
yeah, Yeah,
franchisee in
like a
some place,
master
and then they.
franchisee or a distributor, like a
Oh,
distributor.
okay, okay, okay,
Yeah,
okay, okay. And then they further from
yeah,
their network, whatever transactions are happening, they keep a share of that.
yeah.
Okay, 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 okay. Interesting, interesting. Okay. For a Kirana owner, how much extra revenue does he earn by signing up with ROINet specifically?
Uh, so obviously, it's like a Pareto, right? So the top end of the spectrum, a guy could be earning a lot of money, and then there is a long tail. But on average, I would say if you look at an average kind of earning, I would say between 8 to 10,000 rupees is what a Kirana store can earn purely out of the services he's taking from you. The higher the spectrum, guys could earn as high as 100,000 rupees, and then of course you'd have a long tail, uh, you know, 500 rupees, whatever it is. But so average, I would say 8 to 10,000 rupees would be an average earning which Kirana store could earn in today's context.
And what are the sources? Like, how much of this comes from, say, ticketing, and how much comes from the core money transfer or deposit and stuff like
Yeah,
that?
so I think if you look at the payment space, obviously is a large piece of the pie. Um, but today, I would say, especially in the last 2 3 years, we're seeing that the non-payment product categories are adding a load of contributions to the entire portfolio. So today, for example, our non-payment portfolio adds almost 30 35% of our total revenue to us as a company, and that's increasing quarter on quarter. This may not, however, be true at the retail level because retailers also work in specialization. So typically, a travel partner might be a unique travel partner, right? Um, um, so payments partners are kind of unique. Travel partner could be unique. It's difficult to say that at a retail level, at a broad level, what kind of mix that would be because there are specializations of partners in that sub community.
Hmm. Okay, okay, got it, got it. Okay, so tell me about your journey. So you started with one state, signed up, built a sales team. How did that progress over the last about 9 years?
2017 is when we kind of raised our first round of funding. Again, this happened through our network. It came from HP. We had a bunch of investors in HP Singapore. And, through Common Connect, we got meeting, and I kind of shared the plans with them. And the main person, he comes from a very high level of credence in the financial services space in Singapore. He, as a matter of fact, was the chairman and CEO of DBS Bank and is the current chairman of the Singapore Stock Exchange. So he kind of liked the model of being able to provide banking services to consumers, and that kind of model ticked with him. And I still remember the first meeting we had. He looked at our presentation and he said, "You guys focus on the business, and you leave the headache of capital to me." So that gave us a lot of confidence, and I think he signed a check within the first 4 weeks. And and post getting that money, obviously we said let's scale faster. And I think in the next 18 months is we pretty much covered most parts of the country.
How much were you pre fundraise? How many point of sales, and how much?
I think we're close to about maybe what 7,000 points, maybe
Okay,
10% of what we are today.
wow. Okay, okay,
Yeah,
okay.
yeah.
Mm. Yeah, and like, when did the diversification into non-payment areas start? What was the journey over there?
So the two pieces. Number one is I think if you look at the banking fraternity itself, the public sector banks and private sector banks, and now uh, are looking at the platform and developing new products on top of it. So in the last, I would say 3 4 years, the banks are looking at lending as loans as a is an incremental product line item, recovery of loans is an incremental product item, credit card sales is an incremental product item. So on the banking side itself, new products were being added on, and my thinking is that now it's an established infrastructure. I mean, today almost 60 crore Indians have got the BSBD accounts. And from a government perspective, too, they're seeing it like a established banking point of view. They now want to take it to the next level in terms of new products and services. So that was one piece. The banks itself were looking at a product portfolio change, and from our perspective, we realized that if you want to make the business exciting both for the partner as well as for ourselves, we have to develop categories. So the last 3 4 years, when we began the journey on travel, for example, we directly tied up with the railways for the IRCTC business. We tied up with various airline aggregators for the airline business, uh, and we've now kind of setting up separate firms, separate entities to look at. each of the businesses in a very focused manner. So currently, if you look at ROINet Solution, it's the main holding company. Below that, we build up our ROINet Securities arm, which has got now a license from SEBI for creating, for selling mutual funds and for selling securities, stock options, stock business. We're opening up our own separate company for the insurance business. We're looking at a direct broking license from IRDA. And of course, similar kind of thing on the lending side, which is partner lending. So we've realized that now that we got infrastructure, we got close to about 4 crore customers. And these 4 crore customers consume all these products and services. They consume or have a need for insurance. They consume and have a need for mutual funds. It's a good time for us to start building up businesses in a more serious way, not just a plug and play model, but develop solid products and they would develop, really look at it as a separate line of business and leveraging the existing infrastructure we got on the go to market side.
Okay, okay. How do you manage 70,000 point of sales? Like, for example, if you want to launch credit card as a product, or you want to launch mutual fund investment as a product, how does I assume this would need a lot of uh, on-ground training of partners to be able to sell it, right? So how does it happen? How do you ensure efficiency in managing the whole distribution?
Yeah. So one of the things we realized that if we have to look at increasing our penetration of new products, training became a very important component of the whole pie, right? So we build up a very strong training engine. So we build up training teams across the country. The other realization we had and the feedback we got was that while we say India is one country, but reality is that if you look at languages and cultural minds, etc., it's actually multiple sub pockets of countries. And we suddenly realized that when we were developing our training programs, keeping only English and Hindi customers in mind, we actually were not addressing the balance 50%. So we built up training teams in Tamil Nadu, in Karnataka, in Andhra Pradesh, in Telangana. And so that was the first starting point of saying, hey, listen, we have to address that piece well. We also then developed our own learning management system where we started investing a lot in developing modules and training modules and training videos on new categories to ensure that we can back that training thing up with self-learn offline kind of models where people could pick up things. So the way we kind of manage things for us, 70,000 is like one big large number, but we also then kind of segmentize to say that out of the 70,000, we have about maybe 5,000 who could have good interest in credit cards. And more importantly, could be in pockets where credit cards could be sold. So we sub pocketize or sub segmentize these channels, and then kind of ensure that training and whatever support is providing them on the ground level.
Okay, okay. Um, do you have a like a regional s- bias, like you're stronger in one region over another, or is it like spread pan India pretty?
2 3 years ago, I would say yes, we were obviously pretty north focused. We were strong in UP, Bihar, etc. But I think the last 2 3 years, the remaining part of the country has also started firing pretty well. South India, South, I think we're pretty strong in pretty much. Apart from Kerala, we're strong in most of the markets there. We've made good inroads into even Northeast and West Bengal, etc. So I would say it's a fairly decent balance. Um, we're not strong in Jammu Kashmir, however. We somehow we do not crack the code there. And Kerala, we're just making our baby steps. The remaining
Okay,
parts of the country, I think we're pretty okay.
okay. And what kind of revenue do you do now?
So this year we'll close at about 350 crores
Mm.
top line. Yeah,
And what is the split in the so of this 30% you said is the
yeah,
ticketing and these newer
yeah,
initiatives, and
yes,
70% is from the pure banking correspondent kind of a business.
yes, yes.
Okay, okay. And how do the banks pay you? Is it a percentage of transaction, or is it a per transaction, or like how does that work?
They pay you on the value of the transaction. So it's a certain percentage of the transaction. Obviously, it caps at a certain limit, but it's all a percentage of the transaction.
Okay, okay. And what percentage of this do you distribute ahead? Like if a bank is paying you 10
We
rupees.
distribute close to about 75 to 79%. 75%, I would say, roughly is what we distribute. So
Okay,
roughly about 65% is kept by the retail channel, about 10% for the distribution channel, balance we
mm,
keep.
Okay, okay, okay. So this 350 crore out of this, so some 70% is going to the distribution network that you have built up. Okay, okay, okay. So, help me with some like leadership lessons for younger founders. Like you are managing a sales team of 300 people, 70,000 points. And I'm assuming the org strength would be much higher. How did you build the company? How did you scale the culture? Why are you in the top three players? Why are you not just a regional player? Because uh, I mean, it's not like you've raised a lot of money, which gives you the right to be in the top three players. So what is your right to win? Can you help me learn that?
I think the key learnings I've had in building up initially FIA as well as building up ROINet is the fact that the first initial core founding team you develop, uh, that has to be something which you've got to spend a lot of time ensuring that that is a solid team. That's a solid team and with complementary skill sets. There's at times a bias to hire people who have, from similar functions and similar zone, and I think from an organizational perspective that could go against you. So looking at a complementary skill set of people, and it becomes an important consideration. So when I built up Roinet, one of the first thing I said is I need a solid tech guy with a shared vision, and that's where we got one of our other co-founders to come in, and that to me was to me the most critical thing, which helped us build up the business. Um, the other piece, obviously, and that's more judgmental than anything else. But your ability to build up the founding team becomes very critical. And to be honest with you, I've made mistakes in the past. You get it wrong in terms of judgment of people. You get it wrong in terms of understanding, who are the right people to be a part of that initial founding team, and that at times can also derail you because if you get the wrong guys on the boat, that could at times be the difference between make and break. So to me, that was an important learning piece in terms of who's going to be on your initial founding team. That's important.
How's the organization structured? How many people report directly to you, and
Yeah. So we
how
have
do
a
you?
total employee base of about 500 people all put together. Um, I think currently we're about close to about nine odd people, 9, 10 people report to me directly. So we have a country manager sales, and he kind of manages we have three settled managers below them, and then of course the regional teams. Yeah, so but nine odd people report to me directly. For the payment space, while I'm leading I'm the CEO of the company. For the securities business, we got a separate CEO now, and for the insurance business, a separate CEO. And as the NBFC thing license comes, we'll have a separate CEO for the lending business. And the idea now is to really look at specialists, guys with great credence in that space, guys who got great capabilities to build up businesses. My role really becomes more about working with them on the overall strategy and resource allocation.
Okay, okay, fascinating. Uh, what is you made hiring mistakes. What did you learn? Like, how do you judge if a person is a good fit or not?
Uh, so I think one of the learnings I've had is that if somebody is coming into if your conversation with the person is purely around money, कि हम लोग कितना पैसा बनाएंगे, how much money will you make? Can you make, let's say, X crores in 3 years' time? Then that to me is an early warning signal because um, obviously at the end of the day, everyone wants to make money and everyone wants to have a pot of gold at the end of it, but that cannot be your starting point. So the mistakes I made is when I looked in retrospect, I said, you know what, the only conversation I was having with this guy is about how do you become a billion-dollar company and how does he become a $200 million guy. And I think that should have been a good warning signal for me that this guy is not in the game for the right reasons. So to me, that was an initial learning point. The second learning point is the fact that I know it sounds a little this thing strange, but the guy needs to have some quantum of financial stability. I'm not saying the guy's going to need to be a millionaire, but some quantum of financial stability because typically what happens when you're going through a startup journey, you're not going to have rosy days from day one. You'll have ups, you'll have downs, and if a guy doesn't have financial stability, there's a large probability he'll jump off the bandwagon if you go through that down. You know, so also having people with some level of financial security who've got the capability to say, listen, I'm with you through your good, you're bad. The bad is going to happen, like it or leave it. but I have some level of shock absorbing capability to go through it in case of a downturn. So that to me would be the other piece that it's important that you have people with some quantum of corpus because yeah, I mean, end of the day, that's an important piece for a guy to hang around or kind of leave you. So that I would say would be the second piece to look at. The third, obviously, is the concept of shared value systems or whatever you call it, and those are things which I guess over a period of time, each founder develops his own set of comfort level there. But that to me is again an important piece. So in my founding team, I'm fortunate enough to have got guys who got shared value system, who are all in this game for the mid to long term, who all have this professional approach towards running a company. No shortcuts. We don't believe in shortcuts. We don't want to become this big company in 2 years' time. So I think there's a common understanding as to how we want to run a firm, and that to me is an important ingredient. But I guess each founder to his own. That's the way I see it.
Hmm, okay. Have you gone through downturns in the
Of course,
ROINet
of
journey?
course. I mean, I don't think as a startup you can ever say my life's been one way to the top. Of course, we've been through downturns. Of course, we've been through tough
What were
times.
some of those moments?
I think the initial period was very tough. The first 3 years, I think, was very tough. I used to tell guys it's like walking on broken glass, every day. And there were days you weren't even sure you'll see the next week or the next month.
Why is that?
Um, we were bootstrapped, so we had
Hmm.
working capital constraints, and at
Like
the same
the
time,
banks would take their time in releasing your payment.
banks would take their time. Your initial cost to revenue returns were significantly high. But here again, like I said, I was fortunate that I had people who said, "Listen, we believe in the vision. We believe it'll make it happen, and we're willing to sacrifice in the short term." I mean, there were days when people did not take the months when people did not take their salaries, and they said, "No problems. We believe in the vision, and we'll go through their tough time too." And I think that's what kind of kept us going. The other piece, which is an important piece, which I think that you got to be fortunate. I won't say something founders can plan for. You got to be fortunate is also who comes on your board and who is your investor in your firm. Um, so I think I got it wrong on the FIA side, but if you look at it from a ROINet perspective, I think it was very fortunate to have a bunch of guys who are professionals who want to look at the business in the long term. I'll give you a very interesting story which happened in 2020 when COVID kind of struck in, and we were at our full peak in terms of the team build up, and we were doing well. And then we heard about this COVID thing building up, and of course, every day you were hearing about companies downsizing and those kind of things, and obviously employees are very unsure about what we're going to do. So I called up my investor and I said, "Hey, what do we do? What should we do?" Uh, so he said, "How much of money do you have in the bank?" Uh, I said, I can pay the salaries of my team for the next 12 months without any revenues coming in. So he said, do one thing, take a check from us and add another 12 months on it, which means if 24 months you get no revenue, we protect your team, right? And now, post that, he got the entire team to come in and he gave personal assurance that not a single guy will lose his job during that tenure. And so that to me was a tremendous master stroke which really happened and the support we got from the board which helped us keep that team together because building up a startup, identifying good people, it's the most important aspect of building up a company. And if you build up a good team and suddenly because of these events, if you have to let go of them, you could really come back to square one. So having a supportive board to me is again a very important component of building up a company because you're going to have good times, you're going to have your bad times. So don't even think about a situation where you will not have a tough time. But how does your board work with you becomes a very critical aspect of where your company goes to in the future.
Amazing, amazing. Did COVID impact revenues?
Fortunately, I think, like they say, I always believe that while you can always talk about your strategies and all that stuff. Reality, there's somebody on top who's always guiding your ship. And we were fortunate that COVID actually turned out to be a blessing for us because the government then kind of said that these points were important
Essential
points
services.
because the government essential services. So
Hmm.
it actually gave us a reverse boost. So we had a pretty our business actually turned northwards during that point of time. But still, like I said, that 1.5, 2 months was a period we went through a lot of uncertainty, and we were fortunate that things planned.
What about demonetization?
Demonetization was fairly chaotic, I would say. Uh, Not that it kind of questioned our business model, but I think demonetization was very chaotic, and we also encountered a lot of frauds on the ground because we had so-called fictitious CSP points being constructing, collecting money from people on the ground and disappearing overnight. So there's a lot of fraud which happened on the ground. I think a lot of small consumers lost a lot of money. And so for us, the pain was more around seeing a lot of our customers being taken for a ride and losing money, and they're poor customers. But as far as we are concerned, I don't think it impacted our business that much. It wasn't something which kind of hit our business too much.
How does the authorization happen here? I mean, it's a two-way problem of trust, right? The customer needs to trust that this is an actual bank correspondent to whom I'm giving the money. The bank correspondent needs to trust that this is the actual customer as per the records of the bank. How does that happen?
So, as far as the public sector banks are concerned, they have a pretty rigorous identification process, and they have things like police verification and lots of other checks being done on the ground. The local branch manager goes and visits the place, does a due diligence on this guy, checks from his network is a guy credible or not. So, for these 5,000 points we got on the banking on the public sector bank space, these are highly vetted at multiple levels. On the private sector side, typically the network is created more on the basis of our aggregator recommendation or our sales team recommendation. Yes, there is a churn which happens all the time. We do make mistakes in terms of at times quality people we hire, but then of course we do a quick churn. So, but what typically happens is that's the advantage of this model that trust is something which happens through experience. So as the CSP point starts off first with the first 20 customers and that starts building up and the customer goes in there every day, he transacts and he finds that his money is either being transferred rightly or there's a trust which builds up. It slowly kind of the word of mouth is obviously a very strong component and then business starts picking up pretty strongly. So for us, most of the CSPs start peaking in the 9th to 12 month kind of the time frame. The first 6 9 months, I think the customers also checking the local CSP. But as the trust builds up, you find them peaking towards the 9th to
Okay, okay. And how is the CSP validating that this is the actual customer? If I want to withdraw money from my account, then is it a
it's
OTP?
biometric. Everything is biometric. So your
Okay.
biometric becomes because of Aadhaar. I think Aadhaar has really transformed the whole thing.
Hmm.
So Aadhaar, your fingerprint becomes your identification. So you have a fingerprint device. You go and plug it in there. It does a check from Aadhaar. It kind of does a check from the bank, and then you can transact. So your Aadhaar, your fingerprint becomes your identification too.
Okay, okay. Like, what if there's a dispute? Like, a customer says, I deposited 2,000, but I only got an SMS that 1,500 is deposited in my account, or whatever. It could be genuine reason, whatever. So what happens in such case?
If you look at it, most of the CSPs realize that for them to do business, the credence they have with that so-called customer is very important. And most customers also they all work in like it's like a tribe thing. They all work together in groups in a particular village. Everybody knows each other. So if a single transaction is done and there's a dispute, it quickly spreads. So the CSP realizes that I can't, do this because my business could get typically wiped out if just even a few people were to. Uh, Not that we don't have instances of frauds being perpetrated, but if you look at the number of frauds which we've seen in the last 2 3 years, is very minimal, very very minimal. And we rarely get customer complaints of people saying I deposited 2,000, I only got 1,500 or whatever. So I think to that extent, I think it's the power of the social network on the ground which kind of protects the average customer.
Okay, okay, okay. Understood. Okay. Is rural India still a cash economy, or is like UPI? Does I mean, is UPI prevalent?
Yeah, yeah. So we've also been seeing a change in the pattern of the transactions. So earlier was pure cash, but now it's cash. UPI is now kicking in pretty strongly. Cards are coming in. Debit cards are kind of now, of course, with every bank account, the government gives a debit card. So credit cards have become a pretty important piece of the pie. So then cards, UPI, and of course cash is still a large component, but we are seeing a mix in the profile of transactions the last 2 3 years.
So I'm just wondering, as people in rural India get more comfortable with transacting purely through mobile, like UPI means like cashless. So why would they need a physical place to go and buy a ticket or to do a bank transaction? It could all happen through UPI.
So the thing is that this concept of digitization, in the true sense of the word, is still, I would say, a very urban centric phenomena. uh, Whether it's an issue of lack of education, where people are still not comfortable getting onto a mobile phone using a Make My Trip app to book a ticket. I mean, they still find it difficult to link their credit card to the application and those kind of pieces. So I think that I think education is one barrier for a person to get totally digital. I think that's one issue. The other issue also is the fact that today a large portion of customers do not get access to things like credit cards because they don't have a CIBIL score, they have a negative CIBIL score. So for them also to use some of these applications, but it's kind of constricted because of the lack of the fact that they cannot have credit cards linked to their applications. So the you might say the basic premise on which I think rural India typically works is that they work on the assisted model, where they are more comfortable walking into a store, they trust the guy, and they're saying, "Listen, help me do this transaction." So our then focus becomes digitize the pipe which helps the consumer, right? Um, can this change? Will this change? Answer, it could change. I think it could take a 5, 7, 10, 15 years, as education level changes. But as of now, you might say the model works on the fact that the customer still needs an assisted touch. And that's where we come in.
Okay, okay. How are you solving that access to credit problem? Like you're starting your own lending vertical as well. So how is that going to work?
So, 2, 3 things. Number one is we've kind of tied up with various NBFCs, and we kind of providing working capital support to our own set of partners, these 70,000 partners. And I think that's an issue at a country level. So if you look at there's a demand X, the X demand is not getting fulfilled because the retailer who's the middleman between the customer and the company doesn't have working capital to provide that kind of be that quantum of X, and it's all linked to his ability to raise funds. Um, so, for example, one of our retailers, for example, does 5 lakh. He may have a demand for doing 10 lakhs of transactions, but the balance 5 lakhs he cannot do because he cannot fund the wallet, right? So we're working on a program where we're saying, okay, we'll fund your wallet because we trust you, and because of the fact that now you've got a higher wallet cover, you can therefore do a higher number of transactions in your store. So the idea of this entire working capital support program we're running is to really make sure the retailer can optimize the business in his respective territory and therefore to that extent grow further, and in the process obviously we also end up scaling our business.
Okay, interesting, interesting. What will your own NBFC do? You're starting your own NBFC as well, right?
Yeah, so our core of the NBFC will be predominantly around looking at 2 3 things. Number one is looking at scaling up this entire thing because 70,000 points, I mean, multiplied by even 1 lakh rupees is a lot of capital, right? So and beyond a point of time, for you to be doing that in a large scale, you need to have a license. You can't do it from your own books. So that's one piece. The other piece is that we are also seeing a very interesting opportunity with mutual funds as one of our business opportunities coming in. And as you'll be aware, that mutual funds in tier 2, tier 3 towns is now really on the way up. So if you see the mutual fund space today, almost like 20-25% of the total AUM, mutual fund AUM comes from towns beyond the B30, beyond the top 30, and it's growing much faster than the growth of mutual funds in the top 30. So we are seeing an opportunity of providing lending against, for example, mutual funds. So if you got a mutual fund, lakh rupees, maybe we can give you X amount of money as a loan against that without you having to break your mutual fund. So we are seeing that as an opportunity going forward. So more collateralized options of looking at lending support to consumers.
Okay, interesting, interesting. What about credit cards? Is that a space you want to get into?
Yeah, so credit card, as a matter of fact, we're already doing our own aggregation model. So we have a company called ROINet Flexi in which we are pushing our credit cards and our leverage loans business. We've tied up with every bank in the country today on credit cards, and we made good traction the last 12 to 15 months. However, an interesting product category which I think we want to develop is securitized cards. We feel that one of the reasons why a large portion of the country today does not get access to capital or doesn't get access to loans, etc., is because of the fact that they don't have a civil, they don't have a credit rating, a digital credit rating. Now it's a chicken egg story, you know. So I'm a consumer. मेरे पास civil नहीं है. I walk into a bank branch and say I want a loan of ₹1 lakh. They say, "अब आपका civil नहीं है, I can't give you a loan." So technically, what happens? He goes to the local money lender who today charges 3, 4, 5%, and captures most of the value there. Now with a securitized card, what's happening is that you're offering the guy an option to say, "आप 10,000 रुपए की FD दो, and against that, we'll give you 9,000 rupees a credit card." Now, the minute you create a credit card and you start using it for 6 months, you automatically build up a CIBIL score. So we are tied up recently with the bank for the securitized card, and we got some amazing results in UP. I mean, I had consumers, I had retailers and consumers who said I had a negative CIBIL score, but thanks to my usage of the card, now it's upwards of 800. Now it's gone to 800. I can walk into a bank branch and I can pick up a loan at whatever that 12, 13, 14%. So we think that this is a very powerful category, and frankly, if I'm away, I would love to speak to the government and say, you know what, institutionalize this. You know, to us at a very macro level, if you want to grow the GDP of the country, you cannot grow the GDP of the country if a third of your population is not part of the financial inclusion piece. You cannot. How can you grow the country if today 30% of population is still having to go to a money lender at 3% a month, or 4% a month, or 5% a month? It just doesn't work out. It just doesn't work out. So that's one category from our perspective we want to push pretty aggressively. Now we're working with banks to develop that particular solution. And we think it could have a very solid socioeconomic benefit apart from whatever commercial advantages we kind of derive.
Mm. Okay, okay, fascinating. What are the opportunities you see for young entrepreneurs in this whole fintech financial inclusion space?
So I still feel that as far as this space is concerned, it's still evolving. It's still evolving. I think the tremendous. I think the penetration. If you look at any of the space, you look at insurance, you look at lending, you look at the wealth management piece, you look at credit cards. Especially for this space, it's all at a very nascent stage, and it's all evolving. And I think for young, smart, bright, people who want to build up businesses, I think the number of options available is pretty large. The canvas is pretty large. So the opportunity is large. The gaps are large because not too many people have got solutions around this space. So I would say definitely this is a great space to be in. Um, um, it's a great space to innovate, and it has tremendous ability for scale up if you got the right idea and the right ability to scale.
Awesome. Thank you so much for your time, Samir. It was a real pleasure talking to you.
All right, thank you.